Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, January 26. Financials threatened to undercut the broader market's gains, but stocks still posted an advance Monday amid a heavy flow of headlines. Financial stocks finished the session as the worst performing economic sector. They had been up more than 4% in the early going, but finished with a 2.1% loss. The initial advance seemed to come on the back of a rebound in European financial stocks, which have been dogged by profit concerns and fears of nationalization. Still, the gains proved unsustainable, and as financials slipped, so too did the broader market. The healthcare sector, down 0.2%, finished modestly lower, weighed down by Pfizer. The pharmaceutical giant is acquiring Wyeth for $68 billion, or $50.19 per share. The offer comes at a 29% premium to where Wyeth shares closed before the Wall Street Journal first reported last week that the companies were in talks. Pfizer is looking to fund the offer with a mix of cash, stock, and debt. Though the deal will help Pfizer bolster its portfolio and further develop its drug pipeline, investors were disappointed when the company announced that in connection with the transaction it will have its quarterly dividend to 16 cents per share. Coupling that with downside guidance sent shares of Pfizer to new January lows. As for the latest quarter, Pfizer topped earnings expectations, but Wyeth fell short of the quarterly consensus earnings estimate. Despite Pfizer's announcement, tight credit conditions are weighing on merger activity elsewhere. Dow Chemical announced this morning that it does not intend to close its pending acquisition with Rohm and Haas on or before tomorrow. The announcement was not a total surprise, though. Tighter credit and a severed deal between Dow and a Kuwaiti petrochemicals outfit have put the deal on tenuous footing for weeks. Shares of Dow and Rohm and Haas weighed on the materials sector, which fell 1.5%. DuPont also dropped in Monday's trading. DuPont, which is a Dow component, reports its latest results ahead of tomorrow morning's opening bell. Caterpillar fell to a new multi-year low after it reported disappointing earnings and issued downside guidance. Challenging macro conditions have the firm looking to cut roughly 20,000 jobs. One bright spot for the session was McDonald's, which bested the consensus quarterly earnings forecast and indicated that global comparable sales continue to be strong in January. Same-store sales increased more than 7% in the fourth quarter. However, many investors continue to question how long McDonald's can continue logging strong comparables. Stocks began the session in a relatively quiet manner, but quickly climbed to a gain of 2.5% after it was announced December existing home sales increased 6.5% to an annualized rate of 4.74 million units. The December number was better than expected. Although the headline alone qualifies as relatively good news, it was supported by a 9.3% drop in median home prices. That is the biggest drop since the 1930s. The month's supply of unsold homes at the current sales rate fell to 9.3 in December from 11.2 in November. I'm Pat O'Hare for Briefing.com. Thanks for listening.